This week we're going to highlight the results of USDA's Ag Outlook Forum. We're going to turn our attention to Argentina, where late planted corn is pollinating and filling grain. We're going to come back and look at trends in U.S. exports and wrap things up with a long-term review of December corn futures. Hi, this is Brian Basting with Advanced Trading. Let's talk about the corn market. We moved in the last few days of February here, and there's still a lot going on worldwide. Before we get into that, however, let's take a look at the USDA Ag Outlook Forum that took place last week. Now, the USDA came out with their updated balance sheet for 26-27 for corn. Now, I remind you this is not based on survey-based information. It's the best estimates based on economics that the USDA came up with. However, they are looking at acreage decline of about 4.8 million acres compared to last year. As a result, the supply, as you can see there, is down 690 million bushel. They are looking for a reduction in total use, though, of about 400 million bushel. So ending stocks are forecast to decline by 290 million bushel to 1.837 billion bushel. Here's the key message. Look at that bottom line. Yeah, corn has kind of been stable here the last couple of years, but we all know that price change happens and can be very fast. That's why we continue to encourage you to work closely with your trusted risk management advisor to manage price movement and avoid price prediction. Let's shift gears now to South America, specifically looking at Argentina, where late planted corn is pollinating and filling grain. Let's take a look at where that corn is produced in Argentina. Several key provinces here in Argentina, looking at Buenos Aires, Cordoba, Santa Fe, and Santiago del Estero. Again, I'd remind you that Argentina is expected to account for a significant percentage of the world's corn exports from March to June. So even this late in the growing season, weather bears monitoring. With that in mind, let's take a look at the short-term trends. Our slides this week, as usual, are courtesy of T-Storm Weather. Now, we've seen an improvement here. We're looking at the last 30 days of moisture as a proxy for subsoil moisture. We're looking at, notice here across, particularly Cordoba has improved. Across the entire country, 2 weeks ago, 72% of the corn was dry. Today, still 52% of the corn is dry, but that's a 20% improvement compared to 2 weeks ago. Let's take a look at the forecast for next week. Next week, March 2nd through the 9th, you can see some heavy precip is forecasted across those key growing areas. So it looks like we're ending up with a good finish to the growing season for that crop. Let's take one more look at that. Again, to the left of that line, if you will, on this map, is looking at some ample precip over the next couple weeks. So it looks like they're going to be able to finish corn. The equivalent would be early August here in the U.S. Let's take a look at precip totals now over the next 2 weeks. Over the next 2 weeks here, approximately 69% of all corn is forecast to receive near normal or above normal rain. So good conditions for late pollination and filling grain. Let's shift gears now and look at trends in U.S. corn exports. U.S. corn exports year to date are 46% higher than a year ago. It's been a bright spot here for the first half of the crop year. However, we continue to remind you that the record corn crop is overwhelming the record export pace. ATI is forecasting corn carryout to increase 53% this year. Let's wrap things up this week looking at trends in December corn. The December corn, as we tape here on Wednesday this week, is trading near $4.65 a bushel. Notice we're at the end of the crop insurance period. It looks like the crop insurance price will be near $4.60 a bushel compared to $4.70 last year. However, look at that trend between March 1st and November 1st. Quite a bit of potential for increased price volatility during that time period. Again, that's why I strongly encourage you to work closely with your trusted risk management advisor on your marketing strategies. Now, if you'd like more information, please feel free to contact us at 309-664-2300. We'll put you in contact with one of our risk management consultants who'll be happy to visit with you at your convenience. Remember, we upload every Wednesday. Make sure to subscribe to our channel and never miss an update. Thanks a lot. Have a good week.